Okay, when you hear the phrase gift tax return, what comes to mind? Probably a mountain of paperwork, huge dollar signs, something only billionaires need to worry about, right? Well, what if I told you that for most of us, this form isn't about paying tax at all? It's actually about protecting yourself. So let's just cut to the chase. Is this whole thing something you can safely ignore unless you're a multimillionaire? It's a really common assumption, but honestly, it's one that could end up costing you down the road. The answer is a hard no. In fact, filing a gift tax return, that's IRS Form 709, can be one of the smartest financial moves you make. Think of it less as a tax form and more as a secret weapon for your assets and your legacy, even if you never owe a single penny in tax. So let's completely reframe how we're thinking about this. We're going to stop seeing it as a tax bill and start seeing it for what it is, a powerful tool for tracking your gifts and, more importantly, protecting their value. Okay, first things first, and this is the most fundamental rule of all. If someone gives you a gift, you can just relax. This form is not your problem. It is always, always the responsibility of the donor, the person giving the gift, to file Form 709. It's basically the IRS's way of keeping a log of the significant gifts you make over your lifetime. And right here, this is where almost everyone gets confused. There is a massive difference between having to file the form and actually having to pay a tax. And it all boils down to two very important numbers. On one side, you have the annual exclusion. Think of this as your yearly freebie. It's the amount you can give to as many people as you want every single year without even having to think about filing a form. On the other side, you have the big one, the lifetime exemption. This is the grand total you can give away over and above that annual limit in your entire life before you actually have to write a check to the IRS. So for 2025, that yearly free pass is $19,000. You could give $19,000 to your sister, $19,000 to your best friend, and $19,000 to 10 other people. That's a whole lot of gifting, and you wouldn't need to file a single piece of paper. And what about that lifetime exemption for 2025? It's a whopping $13.99 million. Let that sink in for a second. You would have to give away almost $14 million above those annual freebies before you'd owe a dime in gift tax. And this quote really says it all, doesn't it? The people who end up filing gift tax returns very, very rarely have to pay any tax. For pretty much everyone, Form 709 is just a record-keeping tool. It's not a bill. So, if you're probably not going to pay any tax, when on earth do you have to go through the hassle of filing this thing? Well, it turns out there are a few specific situations, these triggers that you really need to be aware of. Here are the main reasons you'd have to file. Some are pretty obvious, like number one, you give any single person more than that $19,000 annual limit. But a few of these are a little less intuitive, so let's zoom in on a couple of the trickier ones, like splitting a gift or giving what's called a future interest gift. Let's talk about this future interest thing because this is a common tripwire. It's basically any gift that the person can't get their hands on right away. So say you set up a trust for your nephew that he can't touch until he's 25. That's a future interest gift. And here's the kicker. You have to report these gifts no matter how small they are. The annual limit doesn't apply here. Gift splitting is another big one. Let's say you want to give your son $30,000. Well, that's over your $19,000 limit, but you and your spouse can agree to split it. The IRS will treat it as if you each gave him $15,000. Now you're both under the limit, which is great. But, and this is a big but, you both have to file a gift tax return to tell the IRS that's officially what you did. Okay, so we've covered the what and the when, but now we're getting to the why. Beyond just playing by the rules, there is a massive, almost hidden benefit to filing this form. This is what I was calling its hidden superpower. Seriously, if you remember just one thing from all this, let it be this. What is the single most valuable reason to file a gift tax return, especially if you're gifting something tricky, like a piece of art or a share in a family business that doesn't have an obvious price tag? It's actually this simple. Filing the return starts a clock, and it's a very important clock that's ticking in your favor, not the government's. It's called the statute of limitations. The moment you file a properly prepared return, a 3-year clock starts ticking. The IRS has exactly that long to look at the value you put on your gift and challenge it. If they don't say anything in those 3 years, that's it. Your valuation is locked in forever. They can never come back and question it again. Now, there is one little catch. This 3-year clock only starts if you make what's called an adequate disclosure. That's just a fancy way of saying you can't just pull a number out of thin air. You need to show your work, explain how you got that value, maybe even include a formal appraisal. And the risk if you don't file? It's huge. If you don't report the gift, that clock never starts. The IRS could pop up 10, 20 years from now, maybe even after you're gone, and challenge the value, causing a massive nightmare for your family. Okay, let's bring this all home. It's time to stop thinking about Form 709 as just annoying paperwork and start seeing it for what it truly is, a powerful strategic tool for your own protection. So here's the bottom line. When you file, you're creating a clear, official record of your major gifts. Most importantly, you're starting that 3-year countdown on the IRS, giving you and your family incredible peace of mind. All of this protection comes with the fantastic knowledge that you almost certainly won't have to pay a single dollar in tax. So, in the end, the question isn't really about a tax form, is it? It's about a choice. Are you going to treat this as just more paperwork, or are you going to use it as a strategy to secure your legacy and protect your family from future headaches? Which one will you choose?